Hey folks, this is Rainer here from Trading with Rainer. In today's video, we will be talking about Confluence. That's right, Confluence. So what is Confluence? Well, if you ask me, Confluence is simply a number of factors lining up together, and after those factors line up together, it actually helps the trader trigger a buy or sell signal. So what are some of the factors that most traders look at? So let's get into it. Number one, it would be support resistance. That's one factor. Two would be the trend. Three would be Fibonacci. Four could be moving averages. And I would say personally the 20, the 50, the 100 and 200 are the mostly watched figures. And some of you could even go as far as to maybe indicators like the RSI, stochastic. So yes, these are simply some of the tools that we traders look at, and definitely not all of them will be aligned at a specific point in time. Thus, what we as traders are trying to find is confluence. And lastly, not forgetting candlestick pattern. So confluence will occur if price is at support, it's with the trend, it's aligned with some Fibonacci number like the 62%, the moving averages, oversold, and candlestick is a bullish buy. So these are some of the factors that would affect a traders when it's about to place a trade. So how do we use confluence in trading? For me personally, I will look at least three factors before I place a trade. Number one, I'll look for the trend. If the trend is up, I will only look to buy. Where will I buy it? I would buy it, I would say 70 to 80% of the time at support level. So I have two confluence, the trend and price is hovering near the support level. The next confluence that I like to look at would be a candlestick pattern. So as price is with the trend, is at support level and it forms a bullish candlestick pattern, that's when I'll look to long. So basically you can actually mix and match the different types of tools out there and give you a specific combination of confluence. Some people who would like to use Fibonacci and moving averages, some would like indicators. So for me personally, I would like to have at least three tools or factors lining up together to build my case story. Only then would I decide to go long or short. So a couple of examples here I'd like to show you guys. So we can look at here the dollar yen chart. So looking at it, we can see the daily is in an uptrend. So okay, number one, the trend is up. Okay, so I'll drill down to the forward chart to build a case for entry. So we know the trend is up. That's first thing. Second thing I'll look at is price at a support level. So let's look back a little bit and we can see previous resistance, price broke out of this resistance area, came back and turned into support. Previous resistance, turn support. So here we have a support level 2. Now the last thing I'll look for an entry would be the price action signal, namely the candlestick pattern. So what candlestick pattern do we have here? I'm sure we can all agree that this is a bullish pin bar. You know, price open here, was pushed down lower by the bears. However, before the close of the period, the bulls came up and closed higher for the period. So this is a bullish pin bar. So we have three factors now: the trend, support level, and a bullish pin bar. So this qualifies for a trade that I'll go long. And this is what I mean by confluence. A number of factors coming in together to give a buy or sell decision. So for this dollar yen trade, I will be long in it because all three factors line up together. For those who like Fibonacci, you can even just pull up Fibonacci and see where does it align with. You can see it's hit around the 50% level. So that's another confluence. Four factors coming together. So if I were to pull in the moving average and see where does it lie, the most common one which is out there is actually the 20, 50, 100 and 200. For this, I'll just plug in the 50. You can see it's okay below the 50. I'll try the 100. Somewhere around the 100. See, 200. So it's in between the 100 and 200. So again, there is confluence here with the Fibonacci if you're looking at the 100 and 200 day moving average. So this is how I look at confluence. You can just plug in the indicators if you want to, but I seldom use them at all, if any. So this is a case for entry to get long for the dollar yen. Now another pair I would like to look at would be this Aussie dollar, which is a 5-minute chart. Let's look at it first and foremost. What is the trend? So let's look back. The trend is bearish. Alright, this is a 5-minute chart, by the way. The trend is bearish after the bad news from China on their manufacturing and output, which is slowing, and the GDP missed analyst estimates. Thus, it affected the commodity currencies like the Aussie dollar. So that explains the sell-off here, and finally this tight range consolidation, and finally another break lower to the downside. So if I were to trade this pair, I could see here is previous support, support, support. So we know that support once broken becomes resistance. So I'll just plot this zone here, right here, and now we can see, alright, as price break through support, it came back higher. And what did it form here? We know that the trend is down. Price has retraced back to previous support, now turn resistance level, and it formed this candlestick pattern. It's called the Bearish Engulfing. As you can see, the candlestick pattern engulfs the previous few candles. It engulfs the previous 1, 2, 3, 4 candles. So it's definitely a bearish signal. So with that, I would definitely go a short as these 3 confluence factors come together. And needless to say, price tanked down. So these are some of the factors that I look at before entering a trade. Namely, the support resistance, the trend, and candlestick. Some may look at Fibonacci, moving averages as well, but personally, my top 3 priority is of the support resistance, trend, and candlestick. I hope this video was useful for you guys, and with that, I would like to remind you guys that you'll never trade alone when you're trading with Rainer. Thank you.